Good morning, everyone. Douglas, your Canon Market Analysis. It is Thursday, March 15th, 2018, 5:29 a.m. Eastern Standard Time. And this morning, we're going to take a look at oil, the main U.S. stock markets, including the S&P 500, the NASDAQ 100, the Russell 2000. Take a look at gold, the dollar index, TLT, the 10-year yield, and we'll also take a look at Bitcoin. So let's kick things off here then with a chart of oil. I'm looking at the daily chart to start things off, just kind of as a reminder of where we're at in the long term real quick. On the long term count here, we have ourselves in a DXY pattern for the preferred count in red. So the circle with the capital letter is the primary wave. So primary wave W. X, and then we finally have ourselves in the primary Y wave stage here. The alternate count would be an ABC move from where we're at or to where we're at right now. The big difference being what it is that we would expect the final leg here to unfold as in a WXY. We'd want a three-wave pattern as indicated by the continuing red annotations here for the intermediate wave degree. In the alternate scenario, we would only expect a five-wave impulsive pattern to move up. So we're definitely on the preferred side on the red count, looking for an ABC move. And I say all that because of what we have had unfolding over really the last month or two now. Since mid to late January, as we were pushing into that top around $66, $67 on oil. So anyway, that kind of sets the stage for what I'm about to explain on the short run here. Again, we're looking for a three-wave pattern for an intermediate wave B before we push up into our final leg up. 1-to-1 ratio between W and Y would bring us to our target of right around $88. That's how we're driving that target. We're also seeing convergence at the 50% 50% retrace from the entire move down from the highs back in 2008. So. Yeah, I think that's all I've got for the long-term count. I guess even longer term too. I have this as a larger WXY move on a cycle scale. I can even pull this out. W, this being the X wave on the cycle, and then the Y wave coming back down from there to put that into a little bit better perspective. So let's zoom on into the more important details. We'll start off on the we'll actually start off on the hourly chart. Because I think we can see everything we want to see. So we did have the top of a five-wave pattern into those highs on January 25th. And then since there, we have kind of two ways that we could have counted this. And we could have counted this either as just an ABC with a very extended C wave, as you can see here in blue, right? Or this is just an A wave in and of itself. So now minute wave A, with this being the back, the retrace, the back test of the headline being, or the neckline being the minute wave B, and then we're in some sort of beginning stages of a sell-off here for minute wave C. I am going to zoom this back out to the 3-hour chart so we get a little bit more on the chart. So let's see. With that being said, it's very clear, as I posted yesterday, that we're in this little wedge pattern here. We've been bouncing off this $6 range. It's certainly left me with a little bit of whiplash back and forth here as we constantly bounce off. It's certainly gotten me to bite a few times on each one of these little dashes to 60, but here we are, and I did expect yesterday to likely get kind of that decisive move on inventories, on the IA inventories, but we never did quite get it. We just continue to consolidate sideways. So one way or another, I mean, if you use Bollinger Bands or anything like that, you know that a more compressed market, the more a market gets compressed, the more likely that when it finally breaks out of that pattern, that you're going to see an explosive move, and that's very much what I'm expecting here. So the reason I set all this up is it's really going to lead us into kind of what the expectation is going to be across the board. I do, at this point, I am leaning towards oil bursting lower here, and and likely targeting at least 55, and quite possibly lower than that as well. I'm getting these short-term waves here in slightly better position. So yeah, back to this then. Let's just quickly look at the wave count here for the how we'd be counting this for the C wave if this is to be the minute wave C. We have a 1-2-1-2 stack. That's kind of how I'm looking at this. And then obviously if we were to break lower from the 60 mark, that would be an indication that we're going to go much lower, in that the wave 3 is unfolded. Otherwise, if we do break to the top side, and I am short oil, and if we do break to the top side and we break out of this to the upside, it's going to be a very easy switch for me to go from a short to long, and conclude that we just had a very odd looking wave 2 here of some sort for a larger move pushing forward, and that the minute wave C was then in fact the end of the end of the B wave here. So anyway, there's that for oil. It really all boils down to where this thing breaks and kind of when it breaks. I could easily see us consolidating sideways for the remainder of the week, and then next week allowing things to kick off. However, with that being said, any sort of inflationary sensitive news or anything like that could easily kick this one way or another. I think we even saw a pretty big jump last Friday on the rig count when that number came out. So yeah, this is definitely kind of, to me, what is the most important chart at this juncture, particularly because if we were to spit downwards here, that would definitely give me the indication that some more deflationary, short-term deflationary pressure still might be in play, especially on in its implications to both stocks and yields. All right, let's move on to the stocks now, starting off with the S&P 500. And again, just looking at the daily chart to get our bearings set first, to kind of make sense of the short-term stuff. But just a reminder from the 2016 lows, we have that as a intermediate wave 4, looking for a complete 5-wave push higher of the minor degree, and we counted the 1, 2 into Brexit as minor waves 1, 2, and so the sell-off that occurred back in late January, early February, being minor wave 4. So again, we had been looking for and continue to look for one slightly push higher for the preferred count. Obviously, the reality of the macro environment has made us apply and think through different scenarios on the short run here that could take us slightly lower before we were to make a complete impulsive wave higher for a wave 5. But that is, again, what the preferred count's kind of been calling for, is that one final move up in a impulsive manner. So with that being said, let's look at the short run, and things get very tricky here. Again, because I want to kind of be true or be respecting, if you will, of what the preferred count has been calling for. But at the same token, I want to be very careful on the short run here. Let me zoom into the hourly on this on the short run here. So as to not, be overly exposed long, if in fact the chart is telling me that something a little bit more ominous to the downside might be brewing. So at this point, this is the chart that I had posted yesterday, and we have kind of continued to pull back, and just what I saw in the short run is this bounce into 2,800, which again I've pointed out many times seemed to be a likely zone of resistance. And yesterday I was expecting the possibility that maybe we pull back, make one more high into there just to kind of finish off a slightly nicer looking 5-wave pattern. We never got that, so something like this could have easily taken place. We'll address that or kind of go deeper in that in just a second. But in the meantime, we've continued to pull back, and at this point, the big line in the sand here, if you will, for me, at least within terms of what right now would be the sub-minuet wave count, these small Roman numerals here, would be the top of what I have labeled as sub-mini wet wave 1, so 2732. Being a very important spot here, because if we were to get overlap, that would invalidate this as being a 4 wave in any sense, and therefore we wouldn't want to think that we'd get one more push up in this leg up as is. So what do we do here? Well, again, we'd want to look for support prior to the 2732, and if something like that were to happen, I do think we could conclude that this could have just been a minute wave 1. If we do catch support here with minute wave 2 pushing higher, I think something like this, if we were to get oil to break to the upside of that wedge, I think something like this could certainly be possible with a push higher. But I am expecting a spill in oil, which is why I'm being a little bit hesitant to want to think that stocks are going to push higher, and I'm definitely thinking through some alternate ideas pushing lower here. So 3732 is very important for my sake in terms of how the picture might be unfolding later. The other thing too that I would look at is just a fib retracement of this entire wave pattern as well, and I'll keep this in, well, we'll pull this all the way over here in blue so we can see where these are at. A break below 2704, so let's call it 2700, kind of round it to the closest whole number there. A break below 2700 to me would also be very telling, as well as that would also begin to kind of dissolve the possibility that this is a minuet wave to pull back to a larger push up on minute wave 3 as well. So yeah, watching the S&P, those are kind of the important zones. I did sell off my longs. I haven't gotten short. I am short oil at this point, but yeah, I do think if we see more deterioration, I'd be very inclined to get short, especially when you see kind of where we're at with regards to extended yields still. Even though we've gotten a nice pullback, it's probably not enough at this point. So yeah, if we were to roll over here too, then and really start to sell off, I'd probably lean towards counting this as some sort of A, B, C pattern for a larger ABC move in and of itself with just a very short C wave. I'd be comfortable with that in the overall look. And as we move into the NASDAQ, you'll see why. Here, both the NASDAQ and the Russell certainly have a very flat pattern look to them. There's not much to add to both these charts that hasn't already been said and that I haven't already mentioned on the S&P chart. But I think the big thing with the NASDAQ here is we are kind of back testing this, we'll kind of call it a neckline here, the breakout point into new high territory where we had that gap. Yeah, I'd be very inclined to get heavy short this if we were to start to break down past, say, 60, 69, 70. This would look very much to me like a false breakout here for the NASDAQ 100. And yeah, any failure here would look very bearish on the short run. So if that were to be the case, the blue count here, the alternate count, would certainly be in effect at that juncture, likely indicating some sort of expanding flat. And I'd lean towards just saying that if we were to get a C wave down, that would be the C leg for minor wave 4. Similarly to the Russell, again, maybe not as pretty of a kind of decisive zone like we have in the NASDAQ with regards to the kind of neckline there from the breakout. But same idea, nice three-wave pattern at this point, that if we were to continue selling or continue downward pressure, would likely be a C wave pushing down for an ABC move lower. So those are kind of the thoughts on the S&P. I'm being a little patient overall with stocks in terms of the short side here, again, until we see some indication of the push lower. It's just one of these things where when I zoom out to this daily chart here, it just looks like your classic kind of I don't kind of bear trap almost still. I could be, I'm willing to be wrong about that. I'm willing to allow the rest of things to unfold and say, yeah, we do have one little leg lower here to go. But it's just one of those instinct things, and we'll wait to see how it plays out. Especially at some point, we're going to want to see this kind of consolidation move burst higher with some real momentum behind it. Otherwise, if we were to continue to roll over, then I'd be a little bit more persuaded from the chart, if you will, on the short side. And again, I'll just take one more look at it. Again, a break back into wave one territory of this move up, and then below that 61.8%, so 2,700 would be what it would take to get a little more persuaded on the short side. And that could easily come as early as today. We're not obviously too far away from such a scenario. So let's move on to gold then. And yeah, we've been kind of consolidating sideways after that big move up in the first week of March. I'm still just kind of watching this little channel line here and seeing if we break through it. There's really not much to add at this point. I think if we were to get any sort of selling in the S&P, and even then, I don't even think we necessarily need selling in the S&P. We are seeing a bit of a pop in bonds, and we'll look at that in just a second. But if we can get some momentum regained in the dollar on the downside, and a little bit more pressure to the upside on bonds, I think we could see a very big explosion here in gold. And I feel like the risk reward and just the setup in this, technically speaking, is very nice to kind of add or to start building a position and then add once we get the break. To me, if we fall say below 1,300, it's a very easy out. In the meantime, we're not too early in this, or not too late in this move. We'd be able to get in an early position. So yeah, like in gold, again, based on the way that we're viewing the dollar. So switching over to that real quick, we had a nice rejection at about 90.35 for the 61.8% retrace. Still not looking terribly impulsive at this point on the first leg down. That's not uncommon. But yeah, we are getting some good movement down here. So the market certainly is painting this out to be some sort of impulsive wave down, or at least beginning the early brush strokes of an impulsive wave down. So I'd love to see us move even further, obviously, and really start to kind of pick up momentum here on the dollar down position. Again, in the longer term here, if we were to start breaking upwards for some reason, and we were to break above the 93 or 94 high that we made back on March 1st, that would be very bullish for the dollar, bearish for practically everything else. But that would be kind of a line in the sand for the longer term view here if something got very bullish soon. So bear that in mind. All right, moving on to TLT. And we've had a nice burst up in TLT recently. Again, very much fitting in line with our expectations. And at this point, and I'm going to change this count to blue, just to kind of put it maybe as kind of more still a question or a possibility. But at this point, I feel very comfortable with this move up in TLT up until we get to the 121 mark. At that point, things get a little fuzzy, and I do think if we were to continue to push a little bit higher, 122.59 would really be kind of the line in the sand, if you will. The reason I'm only comfortable up until those points is I still think, and you'll see why I switched this to blue, I still think there's a possibility that we could make one leg lower for a 5-wave pattern here. So a break above 122.59, which would be where we would begin to get into wave 1 or wave 2 territory and get that overlap, would seem to signify or indicate that we might even be pushing higher. And so I do think we'll be seeing some resistance when we get close to there, that would at least keep the idea of a 5-wave pattern lower on the table. So that is all to say that really I like this trade up until we get slightly above this, probably right around 120. Yeah, I mean, we'll just call it a 38.2% retrace, so 121.16. Yeah, right up until we get to there, I feel very confident about this trade. At that point, though, I'll begin to start scaling out, taking some profits, and seeing what happens when we get into maybe a little bit higher and see if we reverse it all. again, if we were to continue to push upwards though and invalidate the idea of a 5-wave pattern, then that would then kind of confirm the idea that we might start pushing higher and making yet another attempt at this 130 mark to kind of fill that gap on TLT. So how does this look on the yield side of things? Well, we broke through this kind of trend line here that we were looking at a couple weeks ago very nicely, and we've kind of began to slide. We're finding support here right at the kind of 280 mark. So a little bit of a kind of a double bottom pattern here. So we'll have to see what happens. Kind of going along with what we've seen on TLT. I mean, a break here below this 280 mark. Maybe we continue to push all the way down to the support zone right around 265. That seems very likely. Just to kind of zoom out here on the longer term chart. In terms of the count, if you remember, we have an ABC pattern, that kind of idea that has been playing out, but the alternate count, and I guess these have been kind of 50-50 as they both would have likely take the same pattern, but the count in red, we'll call it, could just be a wave 4 for one final push higher. So in the very short run, it seems like bonds will continue to head a little bit higher, and we'll see a little bit more selling in or downward pressure in yields. However, the longer term picture still isn't 100% clear with regard to bonds and yields. All right, and then finally, we're going to finish off with a quick look at Bitcoin, as we had some kind of continued heavy selling yesterday. Early this morning, though, we've had quite the pop. So just real quick, I'm still inclined to think at this point that we're going to get one leg lower here, that the move up from those early February lows to the February 20th high was likely an X wave, and then from there we're likely carving out a Y wave. This count would take us right around the $3,000 mark on Bitcoin. So yeah, that's kind of my initial look at this. One thing we could have though is that this is an impulsive one of a larger move up. However, yeah, it's not exactly to me the easiest thing to see from an Elliott perspective. But with that being said, we are finding support kind of right where we should. If this were to be a 2 wave, so this is impulsive 1, 2, it's kind of right where we should be. I think we'll know very soon with regard to Bitcoin what's going to happen here. If this little bounce this morning can't hold, then I think that would give likely confirmation that we're headed lower at this point. So yeah, those are my thoughts on Bitcoin. It's nothing that I personally trade or invest in any way, and in fact, I'm a bit of a Bitcoin skeptic, just to kind of put it out there. So maybe that's making me want to count this in one way or another. But as it stood so far, I feel like I've been pretty spot on with this count. So I'm willing to kind of trust my instincts and not think that I'm weighing my own Bitcoin skepticism too much. So again, as this count would call for, if we were to get yet another pullback, I'd likely see us pulling back to the support area of the prior 4th wave, which would be the $3,000 mark. So anyway, that's going to be it for today. So good trading, everyone, and we'll see you next time. Bye-bye.